The clock started, therefore, in December. If you ballpark it and say, okay, silver's going to go berserk versus gold and in price for the next couple quarters. So let's say sometime mid-year this year, silver will probably have done much of what it's going to do. And that doesn't mean when it's over, you collapse. No, just go to it, get to its new reality. The spread says so. The history of those prior events, like happened to copper, happened to lead, what happens to gold, it takes out the old highs and goes ape, okay? Silver is likely in the next, starting with December, is month 1, 2, 3, get it somewhere in the second quarter, thereabouts. I'm expecting silver to be at very high price levels. Least 200, probably more like 300 to 500.
Silver may be entering a historic breakout phase, according to market strategist Michael Oliver, whose momentum-based analysis points to an explosive move beginning last December. If prior metal cycles are any guide, such as copper, lead, and gold, silver often lags before dramatically outperforming. Oliver suggests silver could surge aggressively versus gold through the next few quarters, potentially reaching extreme price levels by mid-year. Rather than collapsing after the move, silver may simply reset at a new, higher reality. With momentum spread signaling strength, Oliver projects silver prices could reach $200 and possibly $300, $500, marking one of the most significant rallies in modern metals history. Now, we present the clips from Michael's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
The clock started, therefore, in December. If you ballpark it and say, okay, silver's going to go berserk versus gold and in price for the next couple quarters. So let's say sometime mid-year this year, silver will probably have done much of what it's going to do. And that doesn't mean when it's over, you collapse. No, just go to it, get to its new reality. Mm-hmm. The spread says so. The history of those prior events, like happened to copper, happened to lead, what happens to gold, it takes out the old highs and goes ape, okay? Silver is likely in the next, starting with December, is month 1, 2, 3, get it somewhere in the second quarter, thereabouts. I'm expecting silver to be at very high price levels. Least 200, probably more like 300 to 500, okay? Now,
second quarter of this year?
Yeah. In other words, the verticality's only begun, okay? And again, that would merely be replicating what that copper chart, or what a lead chart did, et cetera. So you want to be there. And the spread just broke out over a multi-year ceiling. So it's just begun in terms of that relative performance signal. And whenever it does that, there's a gusher. Both in net price of gold goes up steeper and silver goes up far steep because the spread broke out. Silver's unleashed, going to catch up to gold. Maybe it'll go to 6% of gold. I don't know, 3% at least. But it's likely to be compressed on the clock. Now, in each of those cases, we microanalyzed those final surges, 79 to 80, September 2010, April 2011, where silver went up double and a half or quadrupled, et cetera. In the middle of those moves, roughly, on the clock now, middle of the clock of those couple quarter moves, there was what you could call a correction or a stumble, or at least a pause. In 79, prior to getting to the January 1980 high, there was not a reversal on a monthly price chart, but there was a pause such that you wasted like 6 weeks in that final surge. You see the little red candle you got there on the monthly?
Yep.
No, the one before you get to the top. That one. No,
this one?
That little guy. Yeah. Okay, so you can see that in October, November, December, there was some lateral action in each of those months where you could have bought and sold it at the same price, meaning there was a pause in the middle of that explosion, which obviously the candle before that was a huge up green candle. And it was followed by what? Another explosion. Similar thing happened in 2010 and 11, if you can move over to that. Again, that's the kind of pause that will confuse people because they'll think, oh, that's the top. Okay, go to 2010 and 11. Okay, there. Oh, see that red candle there? That was a reversal month. In fact, the intra-month high that month was higher than the prior month, and you closed down. So technicians would say, oh, that was a key reversal month, right? Okay, it didn't follow through at all the next month, and it blew your head off. Okay, so again, about in the middle of the clock of that couple quarter explosion, there was a stumble point that no doubt will fool people. So I'm betting probably sometime either late this quarter or early next, there could be a stumble in silver at much higher levels, perhaps, that creates that sense of, oh God, it's a false sense. Will it occur near 100? The arithmetic doubling of the range, arithmetic scale. Or will it occur well in excess of that, like, maybe 130, 150 or something, totally blow out the arithmetic target range, $4 to 50, add 45 to that, so around 95, let's say, go way above that before you have the correction. And once you have that correction, and it could involve a month, if not down month, but at least stumbling action, then what's on the other side could be more explosive even.
Silver may be entering a historic acceleration phase, according to momentum analyst Michael Oliver. With the clock starting in December, Oliver argues silver has broken out versus gold after clearing a multi-year ceiling. History shows similar patterns in copper, lead, and prior silver surges, where explosive rallies included mid-cycle pauses that fooled traders before even bigger moves. Oliver expects silver to reach extremely high price levels by Q2, potentially $200 to $500, with brief corrections along the way, not tops. The vertical move, he says, has only begun. Let's get back to the interview.
Gold is the mama, and yeah, she's the boss, but she is nowhere near any long-term momentum trend structures that tell us you're anywhere near a top. And as I've explained, you're not even near the logarithmic scale that we've done twice before, which would be 8,500. But as long as it's behaving, lag to silver, silver's going to rampage. And I think that within the monetary metals, your emphasis should be on silver as the better place to be than gold, especially over the next, let's say, handful of months. But also something else big is happening, and we had that in the weekend report if you want to show that. It's the spread relationship between the miners and the metals. Yeah, here we go. I use the XAU index, Philadelphia Gold and Silver Miners Index. Been in existence since the 1980s. And if you what I've done on this chart is we plot every single month's close, divide XAU price into the price of an ounce of gold. And even further than I show there, this chart starts in the year 2000. But you could go back 20 plus years there and you'd still see that it lived in a performance range with a value of XAU range either side of actually it got over 35% back in prior to 2000, but it lived around 25% for a couple decades, several decades, further than is shown here. And in September of 2008, it broke below all the lows that had preceded for the prior decades, which is that sharp drop you see there in 2008, where you drop from over 20% down to just above 10 in that collapse. That states the underperformance of the miners, which had been par to gold. In other words, they've been going sideways versus gold for decades, meaning just as much upside in price as gold had, therefore par. But when they broke down in 2008, they began to underperform gold all the way down to that bear market price low that occurred in 2015, which is also when the spread bottomed, December 2015. It went down to 4%. In other words, what's the sanity here? If you like gold, you got to have the miners, guys. Okay, they're not going to zero. Okay, they went to 4% after having lived at an average of 25%.
Yeah.
But when you do, and if you look back at this chart, even going back into the 1980s, there is zero resistance to any upturn on this basing pattern when it breaks out till you get to about 17.5%.
Yeah,
so meaning, that rally high and also the lows that preceded for the prior decade until you get up to that median, actually low level relative performance level. 17% or 8%. There's a whoosh effect. And I think you're going to see it because this base is massive and it's crystal clear. But so few people are aware that this thing is about to start, not finish. I think the miners are about to regain a large chunk of relative value to that which they produce. And therefore, probably this year, they're a far better place to be than gold itself.
Gold remains the anchor of the monetary metals, and according to Michael Oliver, it is nowhere near a long-term momentum top. While gold leads structurally, silver is positioned to outperform in the near term, with miners quietly setting up for an even larger relative move. Oliver highlights the XAU to gold spread, which collapsed from decades of 25% parity to just 4% in 2015. That massive base now shows virtually no resistance up to 15-17%. This spread breaks out. Gold and silver miners could surge sharply, potentially outperforming physical gold throughout the year. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.